JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 18th of January 2021. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, just to see what's happening this morning, what to expect maybe for this week. But yeah, as always guys, before we do that, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So also, what you can do as well, if you want to, you can always subscribe to our strategic report, which we release every Monday. So it's currently getting prepared. So yep, you're still not late. You can click here and then subscribe, and then yeah, you can get our strategic report for the week. So I think you might find it useful. Now then, guys, jumping into the charts. The first one I want to pick up here is Nikkei 225. Last week the index drifted higher, wonderful year, but on Friday it reversed back south here. I didn't really reach one of my targets here, the 29,519 level. However, that's still okay because this move lower that we're seeing here today, we saw here today, it's kind of it could be seen as a temporary correction before another possible leg of buying, because in a way we are still trading above some of these upside lines here. All of them are, don't get me wrong, are very tentative, like for example this one, or we can try to draw this upside line right here, and all of them are still very tentative. So, but in other words, the price still remains above all them. So in a way, there is still a good chance for this one to reverse back to the upside. So if you want to be a little bit more on the safe side, for example, what you could do is keep an eye on the high of last week, which is roughly around the 28,980 zone, and then yep, a nice good pop above it would confirm a forthcoming higher high, and more buyers could join in. So something for you to keep in mind. In terms of the downside, what you could keep an eye on is this little level right here, the 27,600 mark. At the same time, a break below this area, and by the way, this area marks the highs, is marked near the highs of the 4th of January and the 7th of January, and at the same time, if we get a drop below this hurdle, at the same time the price would be placed probably below the 21-day EMA, which could be seen maybe as a short-term bearish indication. But again, for now, we're still trading above these upside lines. Tentative, although, but nevertheless, still there is a chance for this one to reverse back to the upside, and especially if we climb back, if not back, but if we climb above the last week's high, then yep, it could be even we could see even more buyers joining in here. DAX. German DAX. So last week the index drifted lower and closed the week in the negative territory. So, however, the bears should not get their hopes up yet. We still remain. Let me just quickly. Yep, we still remain near this area here, near this 21-day EMA, basically, because looking at the cash index, and that's where the index is currently kind of balancing at. Previously when I talked about this this index last week, when I talked about it, what I was saying that if we get a drop below this 13,907 zone, then yes, we'll aim for this 13,795. But if that gets broken, my next target is the 21-day EMA. Now, of course, if we start drifting further below the 21-day EMA, and of course that's kind of opening the door towards this next potential area of support, which is roughly around the 13,566 mark. Here, for example, for now, I mean, I'm going to be very careful here, and I'm going to be very cautious because this is a very interesting area of support. That's the current lowest point of January. But if that gets broken, guys, I mean, this could, of course, lead to further decline. So for now, we're a very interesting spot. We're still near this 21-day EMA. Let's see how today's day is going to play out. But I'm going to take a bit of a neutral stand on this one, to be honest, and I'll wait to see and see where this index is going to end up being today. DXY. So DXY, the dollar index, is traveling higher. It's pushing nicely here to the upside. It overcame last week. It overcame this 90.60 territory. I talked about it. So now basically I'm kind of leaning a little bit more towards the upside in the very near term, because don't get me wrong, we're still trading below this downside line. Let me just adjust it very quickly. This downside line drawn from the high of the 23rd of March of last year, of course. So in a way, in the very, very short run, there is a chance for this one to push higher. However, I'm going to be very careful near this downside line. But if that gets broken and we see the price climbing further above this one, and maybe even actually, if you're looking for a level here, maybe I could keep an eye on this little level right here, this 91.75 mark, roughly around here, and that's near the lowest point of September. So in other words, if we get a nice push above this downside line and above this lowest point of September near the 91.75, then yes, we could get a little bit more excited with the upside. For now, I'm leaning a little bit more towards the upside in the near term. Let's see how it's going to play out near this downside line, guys. Gold is drifting lower, although today we're seeing a bit of a corrective move here to the upside, but in the overall it's still to the downside. Of course, the stronger dollar is not helping this commodity here, but if you look at this little mess that I've drawn here last week, basically the little triangle here, I was talking about that wait for a violation through of this triangle, of one of the sides of this triangle, and then we could go for the next directional move. So we had a drop below the lower side. We can see that it drifted further below this 1819 level this morning. Let me just actually get rid of this triangle. This morning, we already had a drop below this 1819 level, below the 200-day EMA. So, however, as you can see, it reversed sharply back up here. I'm still going to take a bit of a bearish approach here, because if the commodity remains below the all of these EMAs here, the 21-day, the 100-day, and if it stays below this, then yep, another slide here could be possible. In terms of the upside, well, I mean, as I've mentioned to you guys previously, that for me to get a little bit more excited with the oops, sorry guys, up there, disclaimer popped in. There we go. So for me to get a little bit more excited with the upside, I need to see a break of this downside line drawn from the high of the 7th of August and then a push up of the 1907 mark in order to get a little bit more, like I said, comfortable with higher levels. But at the moment, I'm still kind of a little bit more on the bearish side. WTI oil, so drifting lower, dropped below this 52.72 level. So now what I'm going to be aiming here for is this upside support line drawn from the low of the 2nd of November. I'm going to be very careful near this area. As you can see, in the kind of the price did drop below this 52.72, this key support zone, previously acting as a good area of resistance. So now, I mean, in a way, there is a good chance for us to see this move towards this upside line, towards the 21-day EMA here, shown as the yellow line, and then we'll take it from there, guys. Because if we do get a nice rebound, wonderful news for the buyers. They could take advantage of the lower price here. But if this starts getting, if this gets violated, this upside line together with the 21-day EMA. EMA, then all eyes are going to be on this 49.29 level marked by the high of the 21st of December. And actually that's the highest point of December as well. So a drop below the 49.29 level here, yep, could open the door towards lower areas, guys. So be very, very careful on that one. For now, yes, I'm leaning a little bit more towards the downside, but only as I'll see this only as a temporary correction before another possible leg of buying. Now, jumping into Bitcoin. Bitcoin is stuck in this triangle. So this is what I've drawn last week, guys. Basically, what I was saying that in a way, for now, I'm gonna stick to this idea here that, as you can see, it kind of traveled higher, formed this this downside line. I mean, I can draw now at this downside line, so all this is kind of forming a nice little triangle here. So in a way, kind of what I'm leaning towards here for now is the fact that probably maybe somewhere till the end of January this could kind of continue balancing inside here, coiling up, and then maybe in February we'll have an exit or a nice exit here through one of these sides. However, don't get me wrong, the exit might happen at maybe even at the end of January, but yeah, let's not get into anything yet. For now, let's see guys how this is going to play out inside this triangle, and then let's see which of these sides will get eventually violated. I'm not really gonna speculate too much on all this. Of course, as you can see here on our oscillators, the RSI and the MACD, although they're still kind of the RSI is above 50 and the MACD is in positive territory, still they're kind of pointing, or actually they have already topped, and now they're kind of drifting a little bit to the downside. So we could keep that in mind, but yeah, let's not focus on it too much for now. Mainly focus on some support and resistance levels. So yeah, let's see how all this is going to play out. AUD/USD. So AUD/USD. Here I've talked about this pair last week. Basically, it kind of in a way worked out here a little bit. So it did reverse from this 21-day EMA. Now you can see that it's drifting back down here. I'm going to take a bit of a different approach right now, and in a way I'm going to stick to the waiting game, and I'll wait for a break below the 0.7640 territory right here in order to get excited with the downside. For now, you can see that the pair is near this 21-day EMA, so in a way it still has a chance to rebound and push higher, because as we can see, this 21-day EMA did act as a good area of support previously, but if this 21-day EMA kind of surrenders and we see a further slide below the 0.7640, then of course my target is the lowest point, actually the low of the 21st of December, near the 0.7462 mark. In terms of the upside, I would need to see a push above the 0.7820 level first before examining higher levels, because this way, on a break of this level, the pair would confirm a forthcoming higher high and more buyers could join in. Now, jumping into USD/JPY, the pair is well, it is at a very interesting spot, I would say, because on one hand we do have the equities right now kind of on a bit of a slide. So basically yen buying is increased. However, we do have the US dollar index kind of pushing a little bit north. So we have a bit of a battle here of the kind of safe havens, I would say, and that's why this pair is a little bit on the flat side. So in a drop below this 103.65 territory right here, at the same time the rate would be placed below the 21-day EMA, and lower levels could be met, like for example this 103.05 or even below that. In terms of the upside, a push above the 104.40 level here could do the trick for more buyers. This way, of course, already the pair would be placed above this downside line, and above it, this 104.40 is the high of last week, and then yes, a push above it would confirm a forthcoming higher high, and more buyers could join in. GBP/NZD. So GBP and ZD, I haven't looked at this one for quite a while, but yeah, it's very interesting as always. GBP and ZD is one of the interesting pairs, of course, to trade. It's currently running below this downside line, taken from the high of the 21st of August. On the other hand, it seems that it's trying to make its way higher again. I'm gonna keep an eye for this one. I'm gonna stay neutral a little bit, I would say, because yes, on one hand we do have this nice rally that we saw here. Let me just actually draw this, capture this support from the 1.8629 level that we had a nice push higher here. It's now very close to this downside line. Now the big question is, can we overcome it? If we do see a strong push above this downside line, and we see the daily candle remaining above it, then yep, that's where it could become a little bit more interesting for more buyers. For now, I'm just going to be very careful. Still, there is a good chance for the sellers to step in and take advantage of the higher rate. But for that, we would need to see a test of this downside line and then a strong reversal back down. Maybe actually a drop below the 21-day EMA again here could do the trick for more sellers. Euro GBP. So quick update. Last week, if you remember, I talked about this key support zone. I was telling you guys to watch out for this one. In the beginning of last week, I was aiming for this area, so perfect hit. Now we're seeing a bit of a corrective move here. So this is what I talked about on Friday, that my idea here for now is that we might see a bit of a corrective move here, and this is what we're seeing right now. But if the rate remains below the 0.8933 territory right here, then yes, another slide here could be possible. For me to consider the upside, I would need to see at least a push back above the 200-day EMA and above the 0.8983 territory right here. And then, yes, higher levels could be met. For now, I'm going to be very careful. Yes, I'm going to keep an eye on this hurdle right here. If it continues to provide resistance, then yes, another slide here could be possible. If you're a little bit more on the cautious side and safe side, well, I mean, you could just wait for a drop below this 0.8866 territory right here, because this way the pair would confirm a forthcoming lower low, and further declines could be possible. Now jumping into EURUSD, finally. So this pair is well, it drifted lower last week, so it basically worked out nicely. I was telling you guys to keep an eye on this hurdle, this 1.2130, which failed. You can see that it failed to provide support eventually, and we saw a drift lower. Now, what I was saying then, that my next target is going to be this 1.2059 territory, marked near the low of the 9th of December. And you can see this morning we almost managed to, well, just fell shy of a few pips from reaching that area, but I'll take that. It's a good result, and yep, we've reached that area. Now the big question here is what we're going to do next. Probably the careful approach here would be, first of all, to keep your eyes on this little short-term tentative downside resistance line drawn from the high of the 7th of January, but at the same time keep your eyes on this hurdle, this 1.2059, because if that gets broken, then, well, I mean, we could go for some lower areas here. One of the levels to keep an eye on then could be this one right here, the low of the 30th of November, the low of the 1st of December here near the 1.192425 zone, roughly around here. Slightly above it, we do have the 100-day EMA, which also could provide a bit of support. But like I said, for now, if you want to aim for some lower areas, guys, wait for a drop below this 1.2059 territory. In terms of the upside, well, I would need to see a break of this this downside line, and then maybe a push above the 21-day EMA, and then we could consider some higher levels, guys. So for now, like I said, that's the game plan, guys. I hope you found it useful. Thank you very much for joining in. Thank you very much for your likes, guys. I really appreciate that as well. Really means a lot. Thank you very much, guys. So like I said, I hope you enjoyed it. I hope you liked it. And if you want to catch my video later on, my trader's tea time is always 14:15 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe, be very careful, have your stop losses in place, and everything will be fine. Have a wonderful day, and I'll see you later. Thank you very much, and bye-bye.